welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Andrew Cox giving us a DHL supply chain pricing power index update. But first, we're going to go to Zach Strickland with a carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and happy Friday, and welcome to this carrier update presented by Powerfleet. I'm Zach Strickland, and today I'm going to be talking a little bit about what to expect in the freight market in terms of the coronavirus impact. So overall, we've got our outbound tender volume index pulled up here, 98.77. We are trending higher. Again, a little counterintuitive to what we've seen or what we've heard about in the news. You know, you may be watching the financial markets, watching the stock market go down, down, down. Well, transportation volumes are going up, and it looks like it's about on par with what we would expect this time of year. You know, end of February, early March, you tend to see an increase in freight transportation, everybody getting ready for spring. Well, a lot of what's happening overseas is not going to translate right away to the freight market. Keep in mind that the coronavirus impact also hit just as Chinese New Year was landing. So a lot of people had already brought in a lot of freight into the country. A lot of import volumes surged right before that January 25th Chinese New Year date. So we're not going to see an immediate impact in terms of overall freight volumes in the United States as of yet. And so far, we're right on schedule with what we would expect this time of year in terms of overall volume. So when are we going to know? What do we need to watch in terms of freight volumes to see just when we're going to see, you know, the impact to the domestic trucking market? So right here I have the outbound loaded container volumes for international containers pulled up, along with the outbound tender volume index for the Los Angeles and Ontario markets. Los Angeles and Ontario are dramatically connected to the ports of Long Beach, Los Angeles, the biggest port in the United States. A lot of the Chinese volumes, or Asian volumes I should say, come in through that port along with the port of New York, New Jersey up there. But this one is a lot more concentrated in terms of overall volume coming from China and Asia. So what we see here, you can see the container volumes in blue. These are loaded international 20 and 45-foot containers, volumes coming on the rail out of Los Angeles. So you can see there is a bit of a lead in terms of international container volumes. The reason for that is the fact that you have to transition that container into a dry van load, and that takes it going to a warehouse somewhere, etc. Drayage providers will take it to a warehouse, and then they'll transload it and whatnot into a dry van load. So you can see there's about a 4 to 6 week impact, a lag time between what we see in the rail side versus what we see on the domestic trucking side. Again, a lot of what you're seeing right here, trade war type recovery stuff. So we had a lot of elevated activity last year due to the trade war, and it is now diminished. Again, that's also going to make things a little bit harder for us to see, you know, in the domestic freight market, because we are also dealing with the diminishing trade war impact as shippers have stopped importing as much freight as well. So looking at our next chart, we can kind of see what to expect coming out of the Detroit market. Now, this is not a one-to-one scenario. The Detroit market had the automotive strike occur last year, and you can see that reflected here in the freight volumes in this trough around middle of September into October. Volumes were roughly 8% lower than they are today in the month of August. So, you know, are we going to see some of these, you know, the coronavirus, it's going to diminish the volumes probably in about 6 to 8 weeks after the fact. You know, we're probably looking at about mid-April or so before volumes really start to show up, you know, being diminished. But then whenever we do finally get capacity back online in China, which is still unknown, you should expect at least some sort of elevated volumes coming online there afterwards. So again, a lot of the automotive production is starting to recover. You know, we're roughly 8% higher. It is not going to be a swift recovery by any means, but it'll probably be some level of higher elevation in the third and fourth quarter if it proceeds as expected. So again, not necessarily clear just yet, but we're going to keep our eye on the Southern California port markets. And that'll do it for today's carrier update.
The comprehensive logistics offerings from Powerfleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with Powerfleet.
Hello and welcome to your DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what do you have for us?
What's up, Tony? We stayed at 20 this week. We had some mixed data come in. We saw volumes actually rise 2.5%, which may not seem like much, but that's the most of any non-holiday week of the entire year so far. So a little bit of jump in volumes, but we did see capacity loosen again. The outbound tender rejection rate fell 6%. It's now well below the 2019 average, and 2019 was a year of overcapacity. So currently the shippers are in dominant pricing power.
Okay, so no change from last week just yet. Also, the other thing, it's all over the headlines, right? The corona.
Yeah.
Any thoughts on that and the impact so far?
Yeah, thus far we haven't seen any impacts of the coronavirus on capacity. We haven't seen drivers being taken off the road or anything major there, but we are starting to see volumes be impacted. So you're looking at blank sailings and a lot of empty ships coming over and canceled shipments from China to both coasts. So we're going to see, intermodal volumes are already down, intermodal prices are down. We're going to see this volume eventually trickle into the truckload industry. So the impact of volume is currently on its way. It hasn't impacted capacity yet, but it is likely to in the next couple weeks.
So volume is going to be the thing to watch so far. Is that going to really start to impact, do you think, your 3-month outlook so far?
Yeah, it has. So we have our 3-month outlook actually at 55, meaning that the carriers should be in a little bit of pricing power, looking maybe in the middle of May. And this is because, like Zach just said, we do think some of those volumes are going to come in from China. They're going to hit the coast, but it's going to be 6 to 8 weeks out. So we're looking at mid-April or something before those volumes really hit. And the good thing for carriers, it's going to happen at a time when it's the middle of produce season and it's the beginning of summer where people are drinking more beverages. So we think that there's going to be really an influx of volumes, there. At the same time as capacity may be churning out of the market by midsummer, we're seeing a lot of company failures, and we're seeing the drug clearinghouse actually pop up with higher numbers than we were expecting. So we do think there are going to be some capacity churning out of the market in the next couple months.
So a few catalysts in the play. Definitely. So are there any things that you're watching for in the coming week that might play into the movements here? I know we have the ISM PMI going to get a refresher next week.
Yeah, I'm sure we'll be speaking about that.
Yes.
Nothing in particular. I think it's just continued thought of the coronavirus. I think that is probably the most pertinent thing to moving the rates, or moving the pricing power between shippers and carriers. But we'll definitely keep an eye out for the ISM. We saw growth last month, so hopefully continued growth. That'd be ideal.
Right. So sounds like no movement just yet. More so on the volume side, that's really the main impact so far. The coronavirus definitely going to be an uncertainty playing a factor into this, but we're going to keep an eye on it as we go week to week.
Right, we'll be covering it as FreightWaves always does.
Awesome.
Often.
Awesome. Andrew, thank you so much. That's going to do for this edition of the DHL Supply Chain Pricing Power Index. Thank you so much for tuning in, and we'll be sure to keep you updated next week. And that's going to do for this Friday edition of FreightWaves Now. Thank you so much for tuning in. The content doesn't stop here. We're always streaming around the clock. So check us out on all your favorite streaming platforms, including Apple TV. And if you want more insights, deeper insights on the latest industry trends from great minds like Andrew Cox and his team, be sure to check out the Passport program, where you also get access to our world-class events like FreightWaves Live coming up in Atlanta in May. Thank you so much for tuning in, and we'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.